advertising. And when you're in the network marketing space, in the beginning, you don't necessarily need advertising. And if you grow your business the way you should, which is just word of mouth, then definitely you don't need it. Continuing education, I will tell you that first and foremost, continuing education has completely and utterly changed my life and my business. And one of the biggest reasons why I love the network marketing industry is that I would never have even known what continuing education and personal growth and development was. So the money that you're putting back in your mindset is literally going to change your life, and it's what's allowed me to skyrocket my business 30 times in the last 3 years. So dues and subscriptions would be things like your monthly dues that you have with your company, website that you would have, Zoom. Those things are tax deductible, and then cost of goods sold. And, this is where I tell people, I don't know how in the world that you could possibly build a business without buying products and using those products every single day and going and telling people about them. You've got to take the products in order to tell your story. Giving away the products is also a tax deduction. And then on top of that, cost of goods sold, any products that you're selling. So you can see now we have a total of $35,000 in expenses. And I haven't even gotten started. This is on like 15 different tax deductions. There's over 475 different tax deductions that you can take advantage of by being a business owner. Now, here's the great part. I want you to see this. So we haven't made any money yet. Let's say we suck at network marketing. We're just getting started. We're telling a lot of people. We're just not great at it. We're not good at asking people to join. So we have the same income. We have now business expenses, and I'm not going to use the $35,000 because most people think that's too high. So it's typically, I see between $20,000 and $25,000 worth of expenses. We're going to use this number. Here's the standard deduction, itemized deduction, taxable income. Here's the taxes, the take home, the cost of living, and here's what's left over. Now you actually are in the positive. So that means the average person, single, is saving between $5,600 a year in taxes by having a home-based business and not making any extra money. And then if you're married, that's about $4,500 a year. Well, here's the thing. You'd have to make $3.79 an hour for 2,000 hours a year to be equivalent to the tax savings. So you'd have to get a pay raise, $3.79 an hour or $3.05 an hour if you're married, in order to be equivalent to the savings that you have from having a home-based business. And now what happens when you slip up and actually make money? So let's say you made an extra $500 a month. So now our income's gone up a little. We kept the same business expenses. And here's the great part. You don't pay money off of the income that you made from your home-based business. And the reason why is because you're still on paper showing a loss, okay? So here's our taxable income, here's our taxes, take-home cost of living, here's what's left over. You made an extra $6,000 a year, but you brought home $10,500 if you're single, $9,500 if you're married. It's almost $7 an hour for every hour that you work just by having a home-based business and attempting to earn income. Here's the thing. I had a client, and I just want to share this with you because I know that 40% of Americans lost their jobs making under $40,000 a year this past year. Huge deal. But I had a couple came to see me last year, and I had a home-based business at the time. I was running out of my house. I had 13 employees at my house, so it was kind of crazy, and 6 children and a dog and a husband. It was nuts. But here's the thing. So this couple, one made $85,000 a year. The wife made $55,000 a year. So combined, they made $140,000. And they had gotten a $35,000 pay increase and want to know how much money that was actually going to generate for them and how much money it was going to cost them in taxes. So we determined that the increase of $35,000 only brought them home $13,000 a year. So they were paying an additional $22,000 in taxes in order to bring home $35,000. It was crazy. So I said, while you're here, let me do some figuring for you. And I just want to see if we just did away with the $55,000 a year and kept the $85,000, what does that look like for you? And so we determined that if the wife stayed at home, didn't collect the $55,000 a year, that she was only generating $1,800 a month or $21,000 a year. They were actually, because they were being put in a higher tax bracket by both of them working, it was actually costing them $34,000 a year extra in taxes. So I told her, I said, you can stay at home, make $1,000 a month, And you would actually be better off, because the thing is, you'd have $20,000 to $25,000 a year in tax deductions. That can offset all of the income that you make from your network marketing business. And from there, that money, the difference, see, the loss on paper, only on paper, now gets redirected to your husband's income. It puts you guys in a lower tax bracket, and you're actually bringing home more money, making $1,000 a month in a network marketing business than you were working, making $55,000 a year. So that was a huge eye opener for me, guys, and it made me realize that people just don't know this information, and we have to share it. So one of the things, just a couple different deductions I want to talk about. Standard deduction for auto expenses, you can do 58 cents a mile. That was typically the best way to go, but when the tax laws changed in 2018, it's actually not as good, especially if you have a newer vehicle. And so $15,000 in miles, if you had 15,000 miles at 58 cents a mile, that's about $8,700 in a deduction for you. And it's almost never a good idea under the new tax law. What is a good idea is the actual expenses, but you have to first determine what your business usage is. So your business usage is determined by business mileage divided by total mileage, and that gives you your business use. So if you had 8,000 miles on your car for business, 10,000 total, that would be 80%. And so then you would add up and track your gas, your oil changes, your repairs, your supplies, your interest, your car washes, even interest, so the interest on the car, all of that becomes a tax deduction, and you multiply that by your business use percentage. So if you had 12,000 actual expenses, 80% of that would be $9,600 a year. Well, wait, there's more. So you actually not only get to write off the actual expenses, but you get to depreciate the car. And so what used to take a $50,000 vehicle, if you had a BMW, it would take 18 years to write off with the old tax law. You can now write it off over 5.3 years. So the depreciation is increased 3 times. And if you have a vehicle that's over 6,000 pounds, so if you buy like a Land Rover, you buy a Tesla Model X, if you buy a Suburban, all of those are over 6,000 pounds, and they're actually 100% tax deductible in the year that you buy them, regardless of how much you pay for your down payment. You could even sign over the bill of sale, and then you now get access to the tax deduction. So this is what the rates look like in 2017 for depreciation. So the first year was 11,000. You can see it drops dramatically and cuts in half, whereas now the current year you can take 10,000 the first year, 16,000 the second year, and 9,600 the third year. And so if you understand this is the reason why Amazon doesn't pay taxes, and they've claimed losses every year for the last 20 years. So they last year made $11.2 billion, and the reason why they didn't pay taxes is because they bought tons of vehicles and they replaced UPS. So they were able to take what's called bonus depreciation. And so you have the same access as soon as you become a business owner. You know, there's no difference between you and Amazon or Google or Apple. You just don't know the deductions. So now you can hire your kids as well. So this is a huge deal. Kids are expensive. They have smartphones, dance, college, video games, weddings, all that good stuff. You hire them and they pay for their stuff. So you can hire them to do anything that you would pay someone else to do. They could clean up, they could go with you to events, they could be personal assistants. I have a daughter that does tax preparation for me. I have a son that goes with me to almost every single event and is learning as he's making money. And you can pay them $12,000 a year. They don't have to pay taxes on it. You don't have to pay taxes on it. So it's a tax deduction for you as a business expense, and then they don't have to pay taxes on the first $12,000. And the reason why is because of the standard deduction. Everybody in this country is entitled to standard deduction. There's no unemployment taxes, there's no FICA, no federal, and no state taxes if they're under the age of 18. And if they're over 18, you would just withhold FICA. And we can help you handle all this as well if you need that. Now, the last thing I want to share with you as far as the deduction goes is social giving. And I truly believe that by combining your passion and your profits, it'll change everything for you. And if you help enough people get exactly what they want, you'll automatically get what you want. And my mission in life is to teach more, how to save more so they can have more, live more, and give more. And then I can then nourish more and free more. And these are the 3 nonprofits that we work with. And so we started this process, this social business 2 years ago. And when I started it, I needed to be able to write this stuff off as a tax deduction. I couldn't hope that I would get a contribution for charitable deductions. And so if you combine your passion and your profits, meaning that you connect your gross income number with your giving. And so whatever you want to give to, whatever you're passionate about giving to, but I'll just share with you how it worked with me. So like Tom's Shoes, Warby Parker, those are social businesses. And so for every dollar that we bring into our accounting practice, we provide a serving of whole food plant-based nutrition to children in need. And since we started that process in April of 2018, we've been able to provide over 2.8 million servings now. This was as of September, and we're feeding today almost 9,000 children a day whole food plant-based nutrition. So that's changed everything for me, and it's allowed us to skyrocket our business. Now, the next step as you start making money, a couple things you need to do. You need an LLC. The minute you start making $1,000 a month in your company, you need to get an LLC. That limits your liability, okay? But what's very important about that LLC is it allows you to either treat your business as a sole proprietorship, which is just on your personal tax return. So a partnership, an LLC, and a sole proprietorship are all taxed exactly the same way. Okay, so, but here's what happens. The clock starts ticking the day you have the LLC. And so the LLC can then be treated as an S corporation for tax purposes. And the reason why you would want an S corporation is, one, you're 10 times less likely to be audited by having an S corp. And two, you can then treat this S corp and not have to pay self-employment taxes on 80% of the income that you make. So that's a huge deal. So as a business owner, let's say you cleared net income after expenses was $60,000. If you're a sole proprietorship, a partnership, or an LLC, you're going to be taxed the same way. You're going to have to pay self-employment taxes of 15.3% of every dollar you make, which is $9,180. Now, if you have an LLC that is then treated as an S corporation, you can actually bypass 80% of that. So you're only paying $1,800. So I ask people all the time, would you rather pay $1,800 or $9,000? That's just the difference. Now, people ask me all the time, when do I need an S corporation? When you start making $1,000 a month in net income, meaning after expenses, you need an S corporation. So if your accountant has told you it is not beneficial for you to have an S corporation over $100,000 a year, that's probably because they are not situated and set up properly to process payroll for you and to make sure that you've done everything that you need to do. I've had so many clients overpaying taxes year after year because they are not doing this. And if you do have an LLC and you did not treat it as an S corporation, we can actually go back and amend back to 2017, part of the year of 2017, and get you back the money that you overpaid in taxes. So in summary, guys, I want you to understand there's never been a better time to have a home-based business. And, my big purpose is just to help people understand that the smartest thing that you can possibly do is have a home-based business. And I do like to tell people, you got to follow the money. So the reason why most Americans believe that network marketing is not legitimate is because it's the only thing that people can do on a part-time basis to create full-time income and be able to walk away from their W-2 job. And as I said earlier, the average family saves $4,000 to $8,000 a year in taxes. Well, here's the issue. There's 128 million households in America. You times that by just $4,000, that's $508 billion that the IRS would lose if everyone had a home-based business. So just follow the money. But it's never been a better time for you to get in a network marketing business and stay in a network marketing business and do the things that you need to do in order to be successful, because the guarantee is tax savings. If you go to an event, you're going to get the personal growth and development that you need in order to grow your business. You're going to get the belief that you need in the company and the products and the people that are in the company. And just like what Ray and Jessica are doing here, like, it's amazing. And you will come out of this event and you'll go do more things. And it's a tax deduction for you. So take advantage of the deductions that you're entitled to take. One of the biggest things is hiring your family. So hiring your spouse and your kids for additional tax savings for you. And hire an accountant. Do not do your own taxes. I am dealing with 5 or 6 clients right now that did TurboTax and are being audited for things that, for boxes being checked incorrectly, and now they're being audited for 3 years. Don't do that. Hire someone that knows what they're doing, and hire someone that understands the accounting industry so that you're saving as much as humanly possible. And one of the things I want to implore upon you is that if your accountant argues with you over certain deductions that you're entitled to take, find another accountant, because they're not going to help you in the middle of an audit. Tracking expenses is crucial. You want to make sure that you're tracking your expenses in some sort of accounting software, not just an Excel spreadsheet, and not just writing down like, I think these are my deductions for the year. And I want you to go out and share this with everyone so you can make a massive impact. See, one of the things that I want you to understand, at the end of the day, if someone tells you no, that's fine. But they don't know this information, and it's imperative that they understand that they're going further and further in debt, and we need to wake people up, and we need to allow them to understand the massive tax benefits. So if you want to reach out to us, that's great. Here's our book. We are a full service accounting firm. We can help you with all this stuff. I know I threw a whole lot on you, but one of the things, there's 2 things on this page that I want you to pay attention to. One is a $99 tax strategy session. So there's a link. You can book it. We're going to have a 30-minute conversation with you, tell you what we could have done in the past, what we could do to fix the problem, your structure, make sure that's set up properly, give you deductions that you should have been taking, and just tell you, what we would charge, but then also you can take it to anybody you want. So it's just a second look, and we're going to review your tax return and say, this is what you should have done, and this is what you need to do in the future. And the second thing is, if you want to text that number to the bottom, I will send you, it's going to send you a link to the tax strategy session. It's going to send you a deduction spreadsheet so that you can actually take advantage of, whether you use us or not, the deductions that we give people every single year and say, hey, these are the things that you can write off by having a home-based business. And it's also going to give you a copy to buy my book. So if you want to do that, that'd be great. And guys, and here's the second book that we just came out with. It's a friend of Ray's and mine, Robert McFadden, wrote this book with me. But, it's not about how much money you make. It's about how much money you keep. And it matters that you do everything legally, morally, and ethically that you can to combat your taxes, or you're literally giving away your business and your legacy. So that's all I got today. And I hope you guys have an amazing time at Rankmakers, and everything that Ray and Jessica are doing, you guys should be a part of. It is a massive tax deduction, so take advantage of it.
Courtney.
Yes, sir.
As always, you are amazing. That is such needed information. I don't know if you can see the chat box. It's literally, guys, can we get a fire extinguisher over here? It's literally on fire. It's literally on fire. They're like, this is amazing. And so just really, really appreciate you. This is such needed information, such powerful information. You do such a great job. And I appreciate you. I know you're on like a world tour and you're meeting with all kinds of big wigs and amazings. So we appreciate you taking time out of your schedule to join us and help teach. Now, one of the things that we're going to transition into is